Hello and welcome to Financial Accounting. Our topic today is earnings per share or EPS. We will go over some definitions and compute earnings per share data as it should appear on the income statement of a corporation. EPS is a significant business indicator. It measures the dollars earned by each share of common stock and must be disclosed on the income statement. EPS measures the company's ability to produce income for each common share outstanding. Investors track this ratio very carefully. I have another video that you might find helpful called Earnings per Share and the Effect of Alternative Financing Plans on EPS. I'm posting the link here and in the description to this video. Now let's look at an example. The stockholders' equity section of Handley Corporation as of December 31st, 2023 is presented on this slide. 8% preferred stock, $50 par value, authorized 100,000 shares, outstanding 90,000 shares, 4,500,000. Common stock $1 par, authorized and issued 10 million shares, $10 million. Additional paid-in capital is $20,500,000. Retained earnings, which include the 2023 net income of $33 million, is $167 million. Total stockholders' equity is $202 million. The following additional information is available. Net income for 2023 reflects a total effective tax rate of 20%. Included in the net income figure is a loss of $18 million before tax as a result of a non-recurring major casualty. Preferred stock dividends of $360,000 were declared and paid in 2023. Dividends of $1 million were declared and paid to common stockholders in 2023. For this exercise, we need to compute earnings per share data as it should appear on the income statement of Handley Corporation. Earnings per share, or EPS, is calculated as net income minus preferred dividends divided by weighted average number of common shares outstanding. Dividends are payments to shareholders proportional to the number of shares owned. Preferred dividends are dividends paid to the owners of preferred stock, a type of stock that usually pays a fixed dividend before any distributions to the common shareholders. This payment is typically cumulative, so any delayed prior payments must be paid to the preferred stockholders before distributions can be made to the holders of common stock. The holders of preferred stock usually gain this advantage in exchange for giving up their right to share in any additional earnings generated by the company, which limits the amount by which the shares can appreciate in value over time. In our example, we have 8% preferred stock, $50 par value, authorized 100,000 shares, outstanding 90,000 shares. The total is $4.5 million. Provision for preferred dividends is calculated as follows. Total preferred stock of $4.5 million multiplied by 8%. Preferred dividends are $360,000. This amount will need to be subtracted from the net income of $33 million. Note that most preferred stock is cumulative, and the dividend is usually declared yearly. But even if a dividend is not declared, it is always subtracted in the EPS numerator. The rationale is that dividends in arrears on cumulative preferred stock will eventually be paid in the future when the corporation declares a dividend. In our example, we know that preferred stock dividends of $360,000 were declared in 2023. So this amount is subtracted from net income in the EPS numerator. We also need to find out the weighted average number of common shares outstanding, which is the denominator in the earnings per share formula. The weighted average takes into account how long each share was outstanding during the year. For example, shares issued at the start of the year will add more to the average than shares added at the end of the year. In our example, the number of shares didn't change during the year. It is 10 million shares. We have the following results. Net income is $33 million. Less provision for preferred dividends, $360,000, which is $4.5 million multiplied by 8%. The income available to common stockholders is $32,640,000. The number of common stock shares is 10 million, and earnings per share, or EPS, is $3.26. And this is how it looks when we plug in the numbers. Net income of $33 million less $360,000 preferred dividends divided by 10 million of common shares outstanding. Some of the additional information that was provided in the exercise doesn't affect the EPS calculation. Income taxes and losses from casualties are already included in net income. And common stock dividends are not a part of the EPS calculation. EPS doesn't represent the dollar amount paid to shareholders in the form of dividends. I hope you found this video helpful. If you did, please make sure to subscribe, hit the like button and ring the notification bell so you are notified when we release more videos like this. Don't forget to visit my channel for more videos on financial and intermediate accounting. Thank you all so much for watching, and I hope to see you all again in the next video.